Thinking about buying your own home? Well, you've probably heard the word mortgage more times than you'd like. But what does it actually mean and how do you make sure that you pick the right one? Well, stick around for this video because choosing the wrong mortgage product could cost you thousands over the years. So a mortgage is a loan that you take out to buy a property. You borrow money from a lender and you pay it back over time, usually with interest. But not all mortgage products are laid out the same. So let's look at the main types and what they mean for your wallet. Start with the fixed rate and the variable rate mortgages because they're the most common. So a fixed rate mortgage means that your interest payment stays the same for a fixed period of time. That usually can be 2 years, 5 years, or 10 years that you're locked into that agreement. Now, some of the pros of a fixed rate mortgage are that you've got predictable monthly payments. You also are protected from interest rate rises, but some of the cons could be higher initial interest rates to agree on that mortgage, and there's less flexibility if the overall interest rates drop. But if you like stability and want to know exactly what you're going to be paying on a monthly basis, then fixed rate could be the one for you. The other most common option is the variable rate mortgage, which means that your mortgage rate will go up and down depending on the Bank of England's base rates. One of the pros of this is that you might have initial lower interest rates, which is great. You also benefit if the interest rate drops, meaning that your interest on your mortgage will drop. On the flip side, as a con, if the interest rates rise overall, your mortgage rate will rise. It can be a little bit harder to budget because your interest rate could be going up and down on your mortgage, so you never know exactly how much money you're going to need to set aside every month. So with all that information, how do you choose the right product? Well, the first thing is understand your financial situation. Can you afford a fluctuating mortgage payment? The second would be understand the future interest rates. Do you think they're going to be up or down in the future? Use comparison tools, look at the best products on the market, and finally, speak to a mortgage advisor. Now, mortgages can be complex, but they don't have to be confusing. And with a little bit of research and a bit of direction, you can make sure you pick the right product for you and it can save you thousands in the future. If you've got any questions about mortgages or have any pointers for those that are looking to get on the property ladder, drop some in the comments below.